Yes.
Now, most of the other people, almost everybody may be paying, right?
Yeah.
In a situation like that, even it is not the law, it's a bit difficult for us to argue, but if we'll study it properly and build up a case, I think there's a case in this. Okay. Yeah, now the time is 7:11. We will start today's session. For that, I'll share the document, the same document. I think you all can see this document.
Yes.
Yeah, unfortunately that day I couldn't cover the area what I wanted due to a lot of disturbances. Therefore, that's the lesson. When you all are having a question, please unmute the mic and ask. But no sooner you finish that, please mute your mics. That day, all of us wasted a lot of time due to somebody's that wrong action, right? Right. Now, as a result, I couldn't cover some of these things also. I think I discussed only up to these few court cases. Mahavitarana versus Commission of Inland Revenue, Rameshwara versus Commission of Inland Revenue, Commission of Inland Revenue versus Disoisa. I explained these things. Then I mentioned that under our Inland Revenue Act, only income which is excluded, the only income which is excluded, basically as per the law, it is the casual and non-recurring nature items. But unfortunately, in section 8, they have mentioned, I think this is a wrong wordings, but what to do, this is there in the law. They says, excluded income they have listed in Schedule 8. It says exempt amounts and the items where on income on which we have already paid the final withholding taxes are excluded. Right. Final withholding tax story, okay, but exempt income, I can't understand why the legislator wanted to include that under excluded, because anyway it is exempted. Anyway, basic principle, any casual or non-recurring nature items, income, are not covered with our Inland Revenue Act. Therefore, if you are in a position to define something as casual or non-recurring nature, then you need not to pay income tax on that. For that, there are so many court cases. Out of those things, I have selected 3 most popular cases. In that, I explained the Mahavitarana versus Commission of Rameshwara versus Commission of Inland Revenue. Those 2 cases, the taxpayee, the appellant, lost the case. But in the case of Commissioner General versus Disoisa, in that case, the taxpayer won the case on the ground that it is a casual or non-recurring nature income. Then anyway, as I mentioned, anyhow wrongly they have worded in this excluded income, in calculating a person's gains or profit from any source, the following shall be excluded: exempt amounts and final withholding payments. Then in addition to that, it says anything, suppose you have included one income into one type of income, you can't include that to another source, right? Then we'll move to investment income. Now, actually, I was supposed to do the investment income part also that day, but I couldn't do that because of that disturbance, right? Investment income, including capital gains, we will discuss. Investment income. Now, in general, if you are saying what is investment income is an income, what we are getting, gains and profit, what we are getting from an investment. That means by making an investment and retaining that investment, we are getting a return. That return, it may be gain or profit. That is we call as investment income. The purpose, the intention of that activity, is investment, not business. That is the difference. At the time of investing or by maintaining that, what's our intention? If the intention is for investment purpose, it is considered as investment. Otherwise, it may be even business, right? Especially in companies and all, it may be a bit difficult for us to categorize whether that is in investment income or in business income. Depending on the case by case, we have to analyze it and see, right? Then, therefore, section 7.1, it says, a person's income from an investment for a year of assessment shall be the person's gains and profits from that investment for the year. Right? Then, for easy understanding, I have categorized this investment income to two categories. Investment income, I have categorized into two categories. Periodical income and the profit on disposal. Periodical income and the profit on disposal. Periodical income means by maintaining that investment, we are getting various type of returns. It may be interest, or it may be dividends, discount, rent, or whatever it is, right? Then those are considered as periodical income under investment income. Then, in addition to that, after some time, we might dispose that investment. We might dispose it. Then the profit on disposal of the investment, we call as investment capital gains, right? By disposing an investment asset, we are getting profit. If we are getting a profit, we call it as investment capital gain. Always you have to use the word investment also along with that. Because these capital gains, there are two types of capital gains. It may be investment capital gains. The other one may be business capital gains. Now here we are talking about the investment capital gains. In calculating a person's income from business or investment, under section 11, all expenses to the extent they are incurred during the year by the person and for the in production of income from the business or investment shall be deducted. There are 4 conditions. Incurred, you have to incur it. When? During the year. By whom? By that particular taxpayer. Then for what? In the production of income. If you fulfill all these 4 criteria, if it is connected with the business, that expenditure is allowed for the business. If it is connected with the investment, that expenditure is allowed as an investment expenditure. Okay. In calculating gains and profits from investment, following shall be included. Now, this law, the legislator was not sure. In section 7.1, legislator says, A person's income from investment for a year of assessment shall be that person's gains and profits from that investment for the year. But legislator was not sure whether the readers or the followers will understand this. Therefore, legislator has given in section 7.2 has given some more explanation, given some examples. Now, what are the examples he has given? These are only examples, not conclusive things. Dividends, interest, discount, charges, annuities, natural resource payment, rents, premiums, and royalties. Gains from realization of investment asset, that is we call as investment capital gain. Amounts derived as consideration for accepting a restriction on the capacity to conduct the investment. Next, gifts received by the person in respect of investment. Gifts received by the person in respect of investment. Then, winning from lotteries, betting, or gaming. Winning from lotteries, betting, or gaming. Then, and other amounts required to be included under this act. Other amounts required to be included. That means legislator was not sure. After giving so many examples, even he was not sure whether we understood the thing. Therefore, that common word, others, again, he has put into this. Then in calculating the gains and profit from investment, following shall be excluded. That's good. Specifically says these things to be excluded. What are those things? Exempted gains and profit. If the law says some of these investment gains and profits are to be exempted, then you have to remove that. Okay. Then gains and profits which have been subjected to final withholding tax. Which have been subjected to final withholding tax. Already the final withholding tax has been deducted. Right. And next, amounts included in employment or business profit and income. Any amounts included in employment or business profits and income. Any amount included in business or business profit or in employment. Now, or if we have already included into the employment income or to the business income, you shouldn't include that into the investment category. This sentence is there in all sources. They have mentioned that. Are there any questions up to now? Are there any questions up to now? Right. Then, as I have to cover the previous day, missing area, the area which I couldn't do also, I'll speed up. Investment capital gains. Now we'll move to investment capital gains. It is explained. Now section 7 is the main section, but it is connected with section 36 to 51. By applying section 36 to 51 only, we'll be able to arrive the investment capital gains calculation. Gains from realization of investment assets shall be a gain and profit, from that investment under section 7 that we already discussed. However, the gain included into an employment or business income should not be included into investment as income also. That also right. Now, gain from realization of investment asset, that category also, if it is a business asset, you can't include, right? Then capital gain or loss on investment asset. How to do this? How to calculate it? Capital gain or loss on investment asset. How to calculate it? This is how we are calculating. Consideration received consideration received minus cost of the asset. Consideration received minus the cost of the asset. That means whatever the consideration received, from that we have to deduct the cost of the asset. Now we should know the meaning of consideration in this case. At the same time, we should know the meaning of cost in this case. Therefore, we have to find out a couple of things. One thing, we have to find out what is an investment asset. What is an investment asset? Then, under the Inland Revenue Act, under this section, what's the meaning of consideration? Then under these sections, what's the meaning of cost? Now we have to find out the meaning of these three terms: investment asset, consideration, cost. Now we have to find out those three. I have explained these things in my note, right? I have explained these things in my note. Now we'll take one by one. We'll take one by one and cover those things. First, we'll start with cost of an asset. First, we'll start with cost of an asset. Now, I said there are three conditions, right? Now, three things to get clarified, right? Then now we are trying to find out the explanations of those three, right? I just put numbers for your easy understanding. As I promised, later on, I'll be sharing this slightly improved note, not big things, not major things, but slightly improved things. Now, there are three things we have to find out. Investment asset. What is investment asset? Then what is consideration? Then what is cost of the asset? Now, the cost of the asset, item 3, is explained here. It is explained in section 37. This 37. What it says, the cost of acquisition, cost of an asset is equivalent to the cost of an asset is equivalent to the cost of acquisition, construction, manufacture, or production of the asset. Cost of acquisition, construction, manufacture, or production of the asset. Right. Then, in addition to that, it says cost of altering, improving, maintaining, or repairing the asset. Even maintaining, even repairing the asset. But these terms created a lot of issues. This maintaining and repairing created a lot of issues. Now, some people, when we are preparing the double entry bookkeeping, now we'll say we have a bare land. The company has bought a bare land. Company had excess money and they found a bare land and they bought the bare land as an investment property. In the balance sheet, they have shown it as an investment asset. Now it is appearing as PPE investment asset, land. But this land, every year, every 2-3 months, we have to do various maintaining activity. We have to put a laborer and cut the grass and bushes and all. We have to cut those things. And we may have to do some other things, right? Activities. If it is a building, we may have to do repairing. Even the land, we may have to repair the fence or gate. Now, then normally when we are preparing accounts, what we do? When we spend money for this grass cutter or the maintained person, laborer, labor fees, labor wages, we just charge it to the profit and loss account as an expenditure. We never go and capitalize it, right? Even if this is an investment asset, we do not capitalize those things. Now, what is the issue? When we do not capitalize those things, now we have already charged to the profit and loss account. Now we have understated the business profit by that. Investment asset maintenance cost, we have charged to the profit and loss account. As a result, the business profit has come down. And we have, that means we have claimed it for tax purposes because we enjoy the tax benefit. Right? Now, at the end, when we are selling the investment asset under cost, even the maintenance and repairing expenses are there. But we have, now, if we allow that as a cost again, double deduction is there. We have already charged to the income statement and got the benefit for business. After realizing this, they amended the law. Therefore, this altering, maintaining, and repairing, these three words, they removed with effect from 1st April 21. They removed it because it created a lot of issues. As a result, with effect from 1st April 21, only the improving cost is there. Only the improving cost. Now, only the improving cost you can consider as a cost, part of the cost. Then what about the altering, maintaining, repairing cost? No problem, you can charge to the profit and loss account. There's no restriction on that, right? There's no restriction on that. Understood? Then incidental expenses, right? Incidental expenses. Now we'll see incidental expenses, right? What is incidental expenses? There may be so many incidental expenses, right? What are these incidental expenses? Now, things like broker charges. To purchase the asset, you have put an advertisement in the newspaper, then you found a broker came and broker arranged the deal. Then broker asked, broker has taken 3% from the seller, and in addition to that, he came to you and asked 100,000 rupees from you also. You paid 100,000 rupees. That's an incidental expense. Suppose you have put an advertisement to purchase this, that advertisement cost is also incidental expenses. There may be various incidental expenses like that. Then D, income amounts on. Income amounts on. An amount required to be included in assessable income, any exempt income, or final withholding tax paid amounts in relation to the asset. Now, we know that on the exempt income and the final withholding tax amounts, the expenditure incurred is not allowable for other things. It is not allowable for other things. Now, that limitation they have put under capital gain tax also. Then in expenses incurred by another person under B and C above. B and C above. Now, that means the person, that expenditure need not to be spent by the, spent by the taxpayer himself. Taxpayer himself. That is not required. Next, cost of an investment asset held as at 30th September 2017. Cost of an investment asset held as at 30th September 2017 is equivalent to the market value of it as at 30th September 2017. This is very, very important. Now, what made them to put a clause like this? Because they realize that now suppose I have a land which I have got from my father so many years back. My father has got it from his parents. Now, how to find a cost? not practical. The history may be 200-300 years. With our Asian culture, the history may be unknown period, definitely. Then how to find the cost? Because I got it from father free of charge. Right? Therefore, it is not practical. After realizing that at the time of legislator, the draft in the law, legislator included that if you had the asset as at 30th September 2017, if you had the asset as at 30th September 2017, you need not to dig into the period prior to that. You have to get a valuation as at 30th September 2017 and take that value at the value, that market value as at 30th September 2017 at the cost of the asset. Okay? If you have any questions, please ask. Now, we discussed one item, cost, right? Now, next, we can see, now by realizing only, that means by disposing only, we are getting all these things. Therefore, realization of an asset also better to consider now. Realization of asset also better to see now. What is realization of an asset? Realized. Pass in the ownership to another person. Pass in the basic explanation is pass in the ownership to another person. Realization of an asset means sold, exchanged, transferred, distributed, cancelled, redeemed, destroyed, lost, expired, expropriated, or surrendered. By all these things, we are giving up our ownership. Then when the person ceases to exist, including by reason of a death of an individual, immediately before the person ceases to exist. Suppose the owner died now, just before his death. What was the just before his death, we have to assume that he realized the asset. Or if we'll liquidate a company, just before the liquidation, we have to assume that the asset is realized. Consideration received from owning the asset exceed the cost of the asset. Now, suppose I have an asset which purchased in 2020 for, we'll say, 100 million rupees. A land I bought for 100 million rupees in Colombo 7, we'll say. 100 is not enough, we'll say 500 million, Colombo 7. Or even 1 billion, we'll say 1 billion. Now, this is a fairly big land. We'll say 40 perch land. Now, the going rate in Colombo 7 may be about 25 million a perch. 25 million a perch. Now, this is suitable for apartment development because it's a fairly big land where you can put up high-rising buildings, go up to even 40, 50 floors. Then, the property developers are trained to offer exclusive prices. Now, the market price is 25 million. One property developer come and offer me 35 million a perch. Now, we'll say 40 perch. 10 million extra money I'm getting. If I'll realize it, I'm getting 400 million extra than the market value. Now, I thought of selling that because it's a really attractive price. Then, surrounding people are also very rich people having good extent lands. They got to know that I am about to sell this. They are really upset. really upset because no sooner somebody comes and construct a high-rise in building, the surrounding land value will come down because lot of disturbances are there to the surrounding properties. They can't have their normal lifestyle. If they are having a swimming pool, they can't use the swimming pool the way they were using. No privacy. Lot of disturbances. As a result, what has happened? Surrounding people got together, created a society. They came and negotiated with me. Then I told what to do. Market price is 25 million. Now I'm getting 35 million. You all are not giving my that extra money. I don't want to sell the property. But as I'm getting 10 million per perch extra, I thought of disposing. Now it's a money game. I'm selling because I'm getting huge extra money. Not really I want money, but as I'm getting extra money on them, then they will get together and pool money and come and sign an agreement with me. Now the agreement is they are agreed to pay me 200 million, not 400 million. Instead of 400 million, they are offering me 200 million upfront of signing an agreement with them, agreeing that during next 25 years, I am restricted of selling the property or doing high-rise in building on my property. For that limitation, they are offering me 200 million upfront. In addition to that, they says, in addition to that, every year during next 25 years, they are paying me 10 million per year. 10 million per year. Every year, they are giving me 10 million. Right. Now, it's attractive. I thought, okay, sign this agreement while keeping the ownership of the property, sign this agreement, irrecoverable agreement, non-cancelable agreement, and collect that 200 million immediately and agree to get 10 million each year. Now that type of things are covering with this. Consideration received from owning the asset exceed the cost of the asset. Original cost. Original cost, I bought it for a lesser amount, we'll say. Then whatever the excess is considered as a gain. D, is it clear to everybody? Next, a death claim becomes bad. I owed 10 million to somebody. Suddenly that person died. No hairs, no hairs. Now I need not to pay. There's no claimant. Then I need not to pay. It's a benefit. In the case of a trading stock, a depreciable asset, a capital asset of a business, or an investment asset ceases to be an asset of any of those types, then that means now I am doing a car sale. I got down so many vehicles. The vehicles are there in my car sale as trading stocks. Out of these cars, I thought of transferring one vehicle for my company use. I selected a vehicle which worth 100 million and I transferred that from trading stocks inventories to PPE. Now, this covers that type of things. In other way, it may be I was keeping it as an investment asset and I transferred to the trading asset. Right? That type of things are covered here. Then change of use or residency. Now, residency is very easy to explain. Earlier, this landlord or the property owner, asset owner, was a resident. Now he has given up the residency of Sri Lanka for tax purposes. Now he is a non-resident for Sri Lanka tax. This covers situations like that. Okay. And even use, again, earlier we were using for business purposes, now we are using for investment. Earlier we were using for investment, now we are using for business. Right. Now next, we wanted to know three main items. What is an investment asset? What is the consideration? What is the cost? We learn cost. Now we learn the consideration. Now next one, we should learn the investment asset. We should learn the meaning of investment asset also. Right. Now next, we should learn the meaning of investment asset. Right. Before that, we'll see rate of capital gain tax. What are the rate of capital? Or we'll first cover the investment asset and come back to this. Investment asset, it is explained in section 195 to say an investment asset means capital asset held as part of investment. Capital asset held as part of investment. Part of investment. That means now there's another question. By searching for a definition of investment asset, we got a new term called capital asset. Capital asset, right? Capital asset held as part of an investment. Then, but excludes the principal place of residence of an individual. Excludes the principal place of residence of an individual, provided it has been owned by the individual continuously for 3 years just before the disposal and lived in it for at least 2 years of the 3 years. At least 2 years of the 3 years. Right. Now, then when we are searching the meaning of investment asset, we found that it has to be a capital asset held as part of investment. There's one type of the thing which is excluded. Now we'll see this capital asset meaning. Capital asset meaning, under the capital asset, only 3 types of assets are there. Only 3 types of assets are there. What are the 3 types? Land and building, a membership interest, a security or other financial asset. Land and building, a membership interest, security or other financial asset. I said only 3, but there's 4th item also. But 4th item is connected with these 3. What it says, an opinion, or an option, right, or other interest in an asset referred to in the foregoing paragraphs. That means now sometimes we are getting the ownership, not freehold ownership, we are getting lease ownership. Now, especially government land. Suppose you have political connections, lot of these politicians and connected people, they, through those connections, they go and obtain lands for various activities. They obtain lands for various activities. On 33 years lease, earlier even 99 years lease. once you obtain that on a lease, you can sell this. There's a huge market value on this. There are people who are willing to buy these things. Then that type of, now on a land or building, you have a lease ownership. Right, option, right, or other interest in a asset. If you are having that, that also comes under capital assets. Capital assets. Right. Only three types: land and building, membership interest in a company, partnership, or a trust, a security or other financial assets. Then B excludes trading stock or a depreciable asset. Excludes trading stock or a depreciable asset. We have to exclude that also. These terms are interpreted in the section 195 of the Act. These terms are interpreted in the section 195 of the Act. These are interpreted. What are the terms? Land and building, membership interest, trading stock, depreciable assets. Those are explained in the law. Right. Up to now, do you have any questions?
Will you just explain more on this? What is meant by membership interest?
Yeah, membership interest now in a company. If you'll take a company, a shareholder of a company, he has a membership as a shareholder. In the case of a partnership, you are a partner of a partnership. That is your membership. In the case of a trust, you may be a trustee or beneficiary. Generally, trustees are the people who are covered with that, but we can cover even beneficiaries. Right? Trustee of a trust or a beneficiary. I think it is clear. Then a security of other financial asset means security like debentures, preference shares even. Now, preference shares for evaluation purposes normally we take as borrowed money, loans. Basically, these are debentures, treasury bills, treasury bonds and all. Even fixed deposit financial assets covers even fixed deposits. Right? Yeah, are there any more questions? Now we know what's an capital asset. Now we wanted to see what is an investment asset. When we were digging into the meaning of investment asset, ended up with capital asset. Therefore, we discussed the capital assets also. Right. Then it specifically says, under the capital asset, specifically says, excludes trading stock or depreciable asset. Under this, depreciable asset also excluded. Now, in a car sale business, a car which is meant for selling, that is
Trading stock.
yeah, trading assets, inventory. If it is an inventory, that won't come under capital asset. But if we are keeping that car not for the business, but as an investment, we got to know, some time back, we got to know government is going to increase the duty rates by 200%. Politicians, connected people got to know. What they did, they collected some vehicles. They collected vehicles, right? Then kept those things for future purposes. But in that case, the intention is earning profit. Therefore, you can't consider that vehicle as an investment capital gain asset. because the purpose is to get a profit subsequently. Investment purpose is, the main purpose is by maintaining that you should get some income also. Now, even land or building. You may be buying a building to rent it out. Then it is an investment income, right? It is an investment income. Likewise, case by case, we have to analyze and see. Right. Now we'll go back and see what's the rate of tax capital gain. What is the rate of tax on capital gain? The capital gains earlier for all the persons, it was 10%. It was 10%. But in the case of companies, with effect from 1st October 22, they increase the capital gain tax rate to 30%. 30%, right? 30%. Earlier it was 10%, and only for companies, they increased to 30%. Why I have highlighted only for companies? Because I know a lot of people are asking, what about partnerships? What about trusts and all? For trusts, partnerships and individuals, still the rate is 10%. Still the rate is 10%. Okay? Continued at 10%. Now, I want to ask a question from you all. Suppose DCSL company, liquor manufacturer in Sri Lanka, brewer or manufacturer, distiller in Sri Lanka. Their income tax rate is 45% now. 45%. Now, suppose DCSL, they had enough and more money, and as they had excess money, whenever they find a valuable land, they buy it. We'll say they are buying some land as investment purpose, or they are buying buildings as investment purposes. Then they maintain those things and rent those things. Land they may be renting out for car parks and all. That's all. Right. Now, they considered this land, we'll say they considered this land as an investment asset. As an investment asset. In the property, plant and equipment category, under non-current asset category, they declared it as investment asset. Now they sold this land subsequently. We'll say by selling that land, they earn 1 billion rupee gain. 1 billion rupee gain. What is the tax rate to be applicable on that capital gain? That's an investment capital gain. What is the rate of tax on that capital gain? Can somebody tell me? Is it 30% or is it 45%? Yeah. Is it 30% or 45%?
If it is considered as an investment asset,
Yeah.
that without a profit motive, then
Yeah.
it should come under 30%. If not, if it's like a business, then 40%, 45%.
Okay. Any other views? Any other views? Right. Any other views? No, any other views? That means everybody believe that it should be 30%. That is correct. That is correct. Because this 45% tax rate is applicable not for the entire company. It is applicable for business income of the company. Business income of the company. Now, they have put 45% especially for 2-3 sectors. Liquor, tobacco, gambling. Liquor, tobacco, gambling. Only on those sectors. They says that to discourage these things, but indirectly to get more and more income. Right? Because the people who addict to these things at any price, they consume or use these facilities, services. They don't mind of paying a high rate as a result of 45% tax. Actually, all these things are for the business activity. If that entity is having investment income, the tax interest income will say the tax rate is only 30%. Capital gain, investment capital gain also 30%. Okay, I think it is clear. Right. Then all other persons, as I mentioned, still 10%. Last budget, government announced that they are increasing this rate to 15%, but that didn't happen yet. No, it's a killing now. This capital gain tax, increase in capital gain tax is a weapon to kill the economy. That's a weapon to kill the economy. Because no sooner you charge higher, more and more capital gain tax rates, people are reluctant to dispose unutilized investment assets, underutilized investment assets. People are retaining underutilized investment asset, where there are so many other people in the market who are willing to buy these things and make use of this for some production purposes. But these people are not selling because why selling? There's a huge tax rate. Tax. Now, therefore, generally, the capital gain, charge in capital gain tax and the wealth tax, gift tax and all is directly affecting to the economic development of the country. Now, this company is increasing to 30%, not a wise decision. Now, even a company is having a property, now, even unutilized or underutilized, they are reluctant to sell. Right. Then payment of tax and filing return. Up to 31st March 21, for each and every capital gain transaction, we were supposed to file separate returns within 1 month of the realization. But this is a difficult task, cumbersome exercise. Therefore, from first of, that means now at that time, suppose we did 2 transactions a month, we had to file 2 returns. After realizing that this is a difficult task, from 1st April 21, they introduce monthly return basis. If you are having any capital gain during any month, you are supposed to file a return on or before the 30th of the subsequent month. 30th of the subsequent month. Because law says within 30 days, not within 1 month. Say within 30 days you have to file. Right. Then you have to make the payment and file the return within 30 days by end of that 1 month. Right. Are there any questions? I'll move to the tax exempted capital gains. As you all know, as we discussed earlier, the principal place of resident is exempted. Only thing, if I'm selling my house today, I have to prove that I was owning this property for during last 3 years. One condition, own during last 3 years. Second condition, out of those 3 year, out of those past 3 years, I was occupying in it for 2 years minimum. One condition, own continuously for 3 years. Second condition is lived in minimum of 2 years during that period. Now, we'll say, today, 18th of September 2025, I bought a property on 21st, we'll say 20th of September 2022. 20th of September 2022. 2 days lesser than 3 years. If I'll sell today, I can't get this benefit. Okay? Minimum 3-year ownership has to be there. That is one. Second thing, during these 3 years, even I have given that out on rent, no problem. But should not be more than 1 year. I should occupy that house at least for 2 years. Now, principal place of residence. As they have used the word residence, for commercial buildings, you won't get this benefit. Commercial building is, we don't call as residence. Second thing, then as I mentioned, lived in 2 years. Now, suppose I have 2 houses, a bungalow at Nuwara and usual residence in Colombo. I'm keeping 2 houses. Now, as I'm old, I thought that it is useless of keeping that bungalow at Nuwara. I thought of disposing that. Now, if I'll dispose it, I never give that out on rent. I had this property for long period, but I never gave out of, I didn't give that out of to outsiders on rent. Can I claim the capital allowance benefit? There's the capital gain benefit on that. Can I enjoy the capital gain exemption on that? I need some answer from you all. I never given out on rent. It was keeping for years. Whenever I get the time, I used to go there and stay for 2-3 days and come back. Whenever non-people wanted, I gave free of charge for them to go and stay. Yeah. Am I to pay capital gain if I'll dispose on the profit? Am I to pay capital gain tax or not? Can I enjoy the exemption?
You can, sir.
Can. Others?
I think you can't.
Why you are saying can't?
Because,
Why you are thinking that you can't?
because even though you are not renting it out, we have not occupied there for 2 years. We have not been there, living there for 2 years. Your living place is somewhere else.
Okay, that is one argument. Then some says you can enjoy the exemption, some says you can't. The answer is you can. You can. With this lived in mean even it is kept it for your usage is a lived in. Right? Now, you yourself need not to live there. Even your children, or even you have kept a servant, or your wife, or somebody else, not for a rent. Then as far as you have not given this property during last 3 years, as far as you have not given this property out on rent for more than 1 year, you can enjoy the benefit. Okay, you can enjoy. Because the law is not clear. When the law is not clear, as I explained at the beginning, the benefit out of the doubt of the law should go to the taxpayer. On that ground, we can enjoy the tax exception. Okay? Then if it is a commercial building, definitely you can't, because it says residence. You can't prove that you used it as a residence. Then next, gains received by a resident individual on capital assets that does not exceed 50,000 rupees per asset and does not exceed 600,000 rupees per year. Right. Now, in this case, small transaction, the small gains, you need not to pay capital gain tax. If per transaction, if the gain is not more than 50,000 rupees, you need not to pay, you need not to file a return. But during that year of assessment, you have to keep on adding these gains. No, if during that year, if your accumulated capital gain goes up beyond 600,000 in one point, immediately you have to pay capital gain tax on the entire past transaction occurred during that year of assessment. Right? Now, you have to be careful. Now, you have to be careful. Next, gain on shares quoted in official listing in Colombo Stock Exchange is exempted. Right? Colombo Stock Exchange, the sales of listed shares is totally exempted. What may be the reason? Do you know anybody what is the reason? Yeah, what is the reason? Why the government was lavishly given this exemption? Is it lavishly given or not?
Yeah, otherwise investors will be reluctant to invest on shares.
Yeah, good point. That's a good point. But the very reason why they exempted this is, instead of charging this capital gain, what they did, at that time they introduced a levy called share transaction levy. Share transaction levy. Whenever you purchase shares or whenever you sell shares, whenever you purchase shares or whenever you sell shares, you have to pay share transaction levy. That comes to a material amount. Now, as they introduce that levy, they excluded capital gain from this. That is one reason. The second thing, as you explained, when they charge capital gain tax on share transaction, it's a cumbersome exercise. People are buying and selling. Now, calculating and arriving the taxable amount is not easy. It is not easy. Therefore, rather than doing this difficult task, they decided to charge a transaction levy. Now this transaction levy is continuing. Then capital gain excluded transaction. When you transfer a property to your spouse or ex-spouse, ex-spouse comes into the scene as a result of divorce cases, like a divorce alimony. You transfer a property that is excluded from capital gain. Then transfer on death. This technically that transfer word is wrong. It is transmission. You are not transferring, automatically it's getting transferred. B, the next, transfer to an associate or charitable institution. Transfer to an associate or charitable institution. If you transfer to an associate of your group, you need not to calculate capital gain. If you transfer to a charitable institution, that is also not liable. We said that charitable institution is defined in section 195. Then the charitable institution covers any institution which is doing beneficial to the mankind. And it covers religious activities, education, eco-friendly activities, poverty alleviation, and all these things it covers. Right. Transfer by way of a gift. If you are gifting some property to somebody, that is not liable to capital gain tax. Then the recipient, when the recipient disposes it, he has to disregard that transaction and go back to the original cost or the cost, the market value as at 30th September 2017 and take that as the cost, not zero. Then next, transfer of an assets of a business to an associate. Transfer of an asset of a business. Now see, of a business. Now, not all asset of a business, asset of a business. Now, that is not investment asset, right? Because it is separated to an associate. Refer, I have given for further studies, you have to refer section 46. Right. Before concluding that section with relate to the capital gain tax. If you have any questions, this is the time for you to ask questions. Do you have any questions? Do you have any questions?
So will you just explain more, bit more on this 146 for transfer within associates?
Now, we'll say a group company. We will say we had we had garment factories. Now, we were there in garment industry. We are there in garment industry. Now, near future, lot of our garment industries will get closed down because of this VAT issue also. Right? That will badly affect to all exporters. All export, that will badly affect. Because we will not be competitive enough in the international market because the exporters, they have to invest more and more money to the government through VAT to finance the VAT. Then at finance cost. Then definitely they have to increase the product or goods prices or service costs. Once they increase those things, our products or services may not be competitive enough in the international market. Right. Now, we'll say we had 5 garment factories. Now we are about to close down or move our garment factories to Bangladesh, we'll say, or Vietnam. Now we are considering whether to transfer to a country like that. Then we saw that there's a good demand for rice milling. For rice milling, there's a good demand in Sri Lanka. We thought of closing down one factory and start another company under the group for rice milling. Because we can see all big rice millers are doing very well in the market, like liquor business. Now, in Sri Lanka, most profitable business nowadays seems to be liquor, tobacco, gambling, that sector. Then finance sector, number 1 finance sector. Then liquor, tobacco, gambling sectors. Then maybe rice producers, right? They have a monopoly or oligopoly. Then we thought of starting a rice milling factory. Now for that, we don't want to buy a new factory because we have factory in Polonnaru area. We thought of converting that factory for rice milling. We incorporate a company. Now in that case, we have to transfer the existing land and building to that new company. When we transfer, if this clause is not there in the law, if this clause is, this exemption is not there in the law, what will happen? It curtails my improvement of the business. Now I realize in Sri Lanka, garment factory is not profitable. There's no future for that. Therefore, I thought of moving to some other sector. Now, that I can't do. I'll be reluctant to do in that if capital gain tax is there on this. Because once I sell it, I bought this property at a very low price. In 1980s, 200 garment factory time, we'll say. Now, the land and building price is huge. Then we can get a big money. Not really worth money, but big amount of money. Now, then we have to pay 30% on that. That is why they brought this. When you transfer that to an associate, the tax won't be there. Now, suppose somebody comes to you for a tax planning. Now, one investor, Mr. A, wanted to invest some money in a new factory. Now, he wanted to buy a land and put up buildings, factory building to start building. He consulted you for that. You said, no, rather than doing this, why don't you buy an existing factory? Now he found a closed down factory of another company. Now he wanted to buy this. The problem, that seller says, no, very sorry, I can't do that. Even I get big money, almost 30% of that money goes to the government. Therefore, I can't do that. Then, if you are the consultant, you can give a nice idea. What is the tax planning? You can ask, you can incorporate a new company by giving major shares to the existing company. Now, existing that landowner buys, we'll say 60% of the new company. You invest only 40%, we'll say. Then, you, with your 40% investment, now after incorporating, That's the associate company of that existing group. They transfer their land and building into that new company because it's associate. Then with your 40% new money injection, you are doing all machinery purchase, building upgradation and all with that 40% you are doing. Balance 60%, the company is issuing shares to that company for transferring their property into this. Then what will happen? That disposer need not to pay tax on that because that company is transferring to an associate. Then after about a year, you ask them to sell the shares. But at that point, when they're selling the shares, balance 60% to you, there's a capital gain tax on that. If you want to avoid that also, at that point, you have to list the company. You list the company. 20% of shares you list in the share market. Then after listing, let the previous company to sell the shares in the open market. Then no capital gain tax. Likewise, you can do a lot of tax planning. You can do a lot of tax planning like that. Right? In tax profession, it is not just applying the tax law. Just a person who is just applying the tax law is not a real tax consultant. You have to try your best to be a tax consultant. Make use of the tax law to get more and more benefit. Right. That is why at CMA we call this as a practical course and try our best to share our practical experience with the participants. Right. Are there any questions up to now?
Yes, sir, in the same question.
Yeah,
Now,
please.
as you said, now if you are selling a land to an associate, that is exempt, as you said, right? So at the same time, say, if we sell a building, which is a depreciable asset, still within the group, so I think it's liable.
Yeah. If it is a building here, it's little liable.
So only for land.
Because it is already depreciated. The building part, it is liable.
So that means only land, we can use this land or say
now what we can do, actually, the value increase, is it on the land or is it on the building? Generally, building values comes down. Land value is the thing which is going up. Therefore, it's a matter of getting a valuer's report to show the building value, less building value, and high land value. Practically, that is what's happening.
Right.
Then there will be a very small tax for the building part. Yeah, good that you have pointed out that. Are there any questions?
According to the IRD Act, so how they define an associate?
No, in section 196, in section 196, that is why I mentioned here, an associate. An associate, the word associate is defined in section 196. Now, only thing, it is a lengthy explanation. I don't want to explain that now. First of all, you all read section 196 and get ready for us to discuss it. Right? On another day, please remind me. Right? Please remind me. Even next day, okay. Right? Even next day, okay. Please come with, after reading that section 196. I'll note down in my diary also. Interpretation. Interpretation of associate. Right, next day we'll do that. Right, please read section 196 and participate for the next day's session. That's good idea. I also note down that in my diary, the telephone diary, on the 4th day, I'll be tracking that also. Okay? That's good. Yeah. Are there any other questions? Anyway, for you, easy reference in section 196. In section 196, subsection 1 covers individuals associateships. Subsection 1 covers individuals associateships. Subsection 2 covers entities associateships. Therefore, when you are reading, why I am explaining, then it is easy for you to understand. Subsection 1 talk about the individuals association, like husband and wife, with children, with nephews, with uncles, aunts, grandparents, in-laws. Likewise, it keep on siblings, it keep on explaining. That is section 196.1. Then 196.2 explain about entity associates. Right. Now I gave a hint for your easy understanding of section 196. Please, you need at least half an hour for you to understand this. Right. Therefore, when you are having leisure time, please read carefully and try to understand it. Okay? Right. Are there any other questions?
Yes, sir. Sir, as per this number D, now if I get a gift from my wife, that is exempt as per this one. Under this
Exempt,
one,
yeah,
by way of a gift,
exempt.
right?
Yeah.
Yeah. Now, say I got a gift from one of my friends, right? So is that also exempt?
Yeah, because gift is explained. Gift
Yeah.
is explained, right? Therefore, somebody has shared this section 196 first part. Anyway, that is there in the act, no? Right, yeah. Yeah, any gift. Only thing, for a gift, there should be a reason, no? Cause for a gift. That is why in Asian countries under the British law, when we are writing gift deeds, we used to write on love and affection. Somebody is giving that as a result of love and affection. Adare sa karunava peretukata gena. Me tagga denawa kiyala liyenawa. Right? Therefore, now IRD might ask, when I receive a gift from an unknown person without any connection, I may have to prove what is the reason. IRD might ask, what is the reason for you to get it? I should be in a position to explain it. It may be even a boyfriend or girlfriend, no problem. That's a reason, right? Or maybe it may be not spouse, but a partner, right? A partner of a person, right? Either case, no problem. But you should be in a position to explain it.
So now, as
Otherwise, it might create issues. Yeah, what else?
yes, sir. Now, if it is a gift, say now it's accepted, it's a gift and it's exempt from capital gains. Now, is there any possibility that IRD say from capital gains it's exempt, but as any other profit, whatever the receipt, any other source, can that be liable for taxes?
No, no other taxes, no, even under gift tax, it says gifts, no gift tax in Sri Lanka.
No, not gift tax. So
No
when
any
you
other
get
tax.
something, doesn't it become a income?
No. It's an income, but received as a gift. As a result, if it is investment capital gain, it is tax-free. Even it is any other income under the Inland Revenue Act, it is exempted. No coverage for that.
Thank you, sir. Clear.
There's no coverage for them to charge tax. Right. I'll move forward. Business income, section 6. Right. A person's income from a business for a year of assessment shall be that person's gains and profit from conduct in the business. Here, in the case of a business, you have to conduct it. Therefore, it is as a result of conduct in the business. Then, business, there's a definition. We'll see the definition. In the section 195, there's a definition. The main point in this is the profit motive. If the profit motive is not there, it is not a business, right? The profit motive has to be there. They have termed the profit motive as a business character. Business character means a profit motive, right? Therefore, they have nicely defined it, but it is not a full definition. It is an inclusive definition because legislator was not confident enough to define it. Therefore, he has given a definition like this. The business includes a trade, profession, vocation, or isolated arrangement with a business character, however short the duration of the arrangement, and a past, present, or prospective business, but excludes an employment. Definitely employment, investment, both are excluded. Right. Right. Then, now, business character, that is profit motive has to be there. That business may be a short period business, a broker thing, right? A brokering business. You may have spent very short time period, but you earn a profit, right? It may be a past service, past activity, present activity, or future activity. No problem. But excludes an employment. At the same time, even any other investment income also excluded. What to be included and what to be excluded into the business income under section 6 of the Act? Gains and profit from business includes, because the legislature was not confident enough to draft the law. Therefore, again, he says, includes these things. What are the things? Because he is not sure whether we understand the law, right? Similarly, he also couldn't understand. He also didn't have ability of properly interpreting. Then, therefore, he has gone and says, it includes service fee, consideration received in respect of trading stocks, capital gains and liabilities of the business, realization of depreciable assets of the business, consideration for accepting a reduction of the business capacity, gifts received in respect of business, derived business money and otherwise included in investment income, amounts derived that are effectively connected with business and that would otherwise be included in calculating the person's investment income. Other amounts, that usual word, other income, required to be included under that. Now we'll try to understand one by one. Service fee, anybody can understand. Consideration received in respect of trading stock. Yeah, obviously that is what we call as turnover. income. Okay. Capital gains and liabilities of a business. Now here, of a business, that means not investment asset. Now here, of a business, right? Of a business, not investment asset. Right. Then realization of depreciable assets of the business. Realization of depreciable assets of the business. That is depreciable asset. You depreciated the lorry, now you are selling it. That profit is a business profit. You had a building, you depreciated the building, now you are selling the building as earlier the asked question. You are selling the building. As you have depreciated it, the gain is a business gain. Consideration for accepting the reduction of the business capacity. Now you are doing a business in a oligopoly situation. There's only another competitor. Two people are in the market. Myself and another person. I'm trying to expand my business. Then the other person come and offer me some money. If you not expand your business, I will pay you 1 billion rupees. You accept 1 billion and don't expand your business. Then while doing my existing business, I'm not expanding. Therefore, he realized that I got some money and I'm capable enough of expanding. If I'll expand the business, they'll be losing the business. What has happened to certain cellular companies in Sri Lanka? Certain mobile phone companies lost the market, right? Ultimately, Dialog came to the market leader in mobile phones, no? Right. Now, how it has happened? Earlier, there were some more players. What has happened? They couldn't expand. But I don't think they bought over their capacities. But in a situation like that, the major player can offer some money and stop the other person of expanding it. This is that. Then gifts received in respect of business. I'm doing a hardware shop. The manufacturer or the wholesale supplier come and tell me, if you'll buy 10 pieces, I'm giving you 1 piece extra. Usually I used to buy 5 pieces at a time. But now, as I'm getting 1 piece extra for 10, I thought of buying 10 pieces. Now I got 11 pieces. I'm not giving free of charge all this 11th one to other people. I sell it. That's a gift received in respect of a business. Derived business money and otherwise included in business income. That means what it says, you have to include either into business or to investment. Then amounts derived that are effectively connected with the business and what would otherwise be included in calculating the investment income. If it is more connected with business than the investment, you have to take it as a business income. If it is more connected with the investment category than the business, then you have to recognize it as an investment income. That is what it says. Then anyway, the common word other is also there. Then gains and profits from business excludes exempt amounts and final withholding tax paid amounts. Amounts included in calculating a person's employment income, obviously. Are there any questions up to now? Are there any questions up to now? Then I would like to ask a question. I'm sure there are some participants who has not understood the meaning of this section. Amounts derived that are effectively connected with business, and that would otherwise be included in calculating the person's investment income. Can somebody give me an example for this? Can somebody? I'm sure a lot of people couldn't understand this. But everybody was silent, didn't ask question. Therefore, I would like to ask this question. Can somebody give me a small example? Hmm? Nobody is giving nobody is responding. Hmm? Right, what to do? I realize that you all didn't understand that properly. I'll take an example. Now we'll see. My company had excess money, and I found that there's a commercial building for sale. With the land, there's a commercial building for sale. I didn't want this building. For my business, I didn't want this building. But as I had enough money, excess money, and the price is also very less, I thought of buying this property. Accordingly, I bought this building. My company bought the building. After buying, after about a year, I realized that this building, I will say, I bought it, and as maintenance cost and maintenance costs are there, I thought of renting that to other people. Now I was giving this building out on rent to other people and getting some income. After about a year, my manufacturing business or my other business improved a lot. And there's a big capacity for me to expand. And as a result, I thought of using my own excess building to expand my business. For my office, will say. Then second year, I start using this building for my business. But I didn't depreciate the building. When I'm using it for business, I'm entitled to depreciate it. But I didn't depreciate. Now, after another 5 years, I thought of disposing this property. Building, I thought of disposing. After another 5 years. Can I? No, then whatever that profit out of that, whatever the profit out of that deal, after 7, 8 years, is it a business profit or a investment capital gain? Is it a investment capital gain or a business profit? What's your idea?
It seems to be an investment capital gain because it is not.
One answer is investment capital gain. Any other things? Any other answers? We have to touch this sentence. Amounts derived that are effectively connected with the business and that would otherwise be included in calculating. Now, in this case, we have to analyze the case and see whether I was permitted to depreciate the building or not. That is one thing. Second thing, whether I was effectively utilized the building for the business. Earlier, I was getting rent income. At that time, I considered as an investment income. That's okay. But during last 4-5 years, I was using the entire business building for my business office or business premises. Then in that case, I think to me, it is effectively connected with the business. It is effectively connected with the business. If I sold it before using it for the business, definitely it was effectively connected with the investment. Now it is effectively connected with the business. Anyway, your answer is also correct. My answer is also correct. But depending on the facts of the case by case, we have to take the decision. Okay?
I said Dacia has not claimed the depreciation allowance. That's why I said.
Right now, good question. Now, I bought it in the intention of investment. After about 3 years, only I got this business opportunity of using it for my business. Until that time, I was renting it out. Definitely during the rent period, you can't depreciate. Under section 16, the capital allowance is there only for business assets, not investment assets. Therefore, during that investment period, definitely I can't depreciate it for tax. Now, after 3 years, I start using it for the business. Now, when I start using it for the business, in that year, after the 4th year, in the 4th year, I started use it for the business. Owner is the same company. Can I start depreciation on that? Can I claim capital allowance? Now we'll see that section of the law, section 16. Section 16 says, for the purpose of calculating a person's income from business for a year of assessment, from a business, not investment, for a business, the capital allowances referred to in subsection 2 shall be deducted. That means subsection 2 we have to read. And the balancing allowance story is there. Now subsection 2. What is capital allowance? The capital allowances are A, granted in respect of depreciable assets owned and used by a person. Now there are four conditions. It has to be a depreciable asset. Then second, you should be the owner of that, owned. Number 3, you should use it. Number 4, by the person at the end of the year. The asset should be there at the end of the year and use it by the person. Now, with relate to the acquisition, is it covered? Can I start depreciation in the 4th year? First 3 years, I categorize it as investment asset. 4th year, I transferred from non-current asset investment to non-current asset PPE. I transferred. In that year, 4th year, can I claim capital allowances on this asset? With this sentence, section 16(2), it says, in respect of depreciable asset owned and used by a person at the end of the year. Can I start claiming capital allowances on the 4th year? What's your view? කාටවත් අදහසක් නැද්ද? No idea. Am I making more complicated? No, these are practical questions because we are learning to apply the law practically. We are not trying to read the law. Anybody can do that. That's the specialty of this course. Right? Yeah, what's your idea? Please give your views.
I feel we can, because now we are owning the asset and using the assets, and at the end of the period also we are there.
Perfect. Perfect. We are in the fourth year, we are fulfilling all 4 conditions. In the fourth year, anyway, it's a depreciable asset. How come a depreciable asset? There's a definition. As per that definition, you are using it for the business. Therefore, it's a depreciable asset. Immovable asset, the categories are there. Then owned. Yes, in fourth year, you are the owner. During the year, acquired during the year, කියලා නෙමෙයිනේ කියන්නේ. You should be the owner. Owned. Then use. Yeah, fourth year, you are using for business. Then at the end of fourth year, you have the asset. Therefore, you have fulfilled all 4 conditions in that section 16, subsection 2. Therefore, in the fourth year, you are eligible to claim depreciation. Once you are eligible to claim depreciation, you have to claim it. As per the law, there's no option for you not to claim. Right? There's no option. If you are fulfilling all these 4 conditions, whether you like it or not, you have to claim. If you'll overlook to claim, still for tax law, it is treated as you claim. It is treated as you claim. Right? Therefore, whether you claimed it or not, for tax purposes, it is considered as claim. Because section 16, subsection 1, it says, capital allowances referred to in subsection 2 shall be deducted. May be deducted, neme. The word what they have used is shall be deducted. No option. Then when it says shall be deducted, if you're not deducted, still it is considered as deducted. Right? Okay. I think this is clear now.
Very clear, sir.
Please ask questions. Right? Next, gain and profit from business excludes, I said these exclusions, exempt items, final withholding tax paid items, and any income included into any other source of income. Next, general allowables and disallowables. As all of you know, under section 11 it says, section 11 covers investment income as well as business income. Only those 2 covers. But section 10 covers even other income. Right? Okay. That's a coverage. Then section 11, as we learn, any income incurred during the year, they are the word. Now see, in this, in the depreciation, section 16, this wording is not there. Section 16, owned. But in section 11, for expenditure allowance, incurred during the year. During the year, you have to incur. Right? There's a difference between these 2. Own and acquiring during the year is 2 different things. Or incurring during the year is 2 different. By the person in the production of income from business or investment shall be deducted. Further, no deduction shall be allowed for an expense of a capital nature. Capital nature items are not allowed under section 11. A capital nature expense includes an expenditure where the benefits spread over for a period more than 1 year, more than 12 months. Normal accounting treatment. cost of funds of financial institutions incurred incurred on a loan provided for new businesses commence on or after 1st April 21 by an individual successfully completed vocational training is made allowable expense. This is totally a wrong amendment in the law. Can't understand what they wanted. Actually, this is a political statement. That whoever the government at that time wanted to show the people that we are giving all these things. But this is useless. This sentence is not relevant at all. Right? The accounting shall be based on generally accepted accounting principles. Earlier also we said, then disallowables in computing any income of a person that is covered under section 10. Section 10 says, these expenses are not allowed. Domestic expenses, not allowed. It is explained, domestic expenses, the term is explained in section 197. Then tax payable under this act. Under this act, what tax payable? Only one tax. It is income tax. We may be using various words. We may be saying withholding tax, capital gain tax, and all. All these are income taxes under this act. Then interest, penalties, and fines payable to government for breach of written law. If you will pay a fine or a penalty to a government institution, not as a result of breach of written law, no problem, allowable. But the cause is, if the cause is as a result of breach of written law, then not allowable. Expenditure or other deductions connected with exempt income, final withholding payment. Those are exempt related businesses, therefore it is not allowable for liable type of things. Dividend of a company, yes, dividend is a declaration of profit after tax, therefore it is not allowable. Retirement contribution, unless there are they are included in calculating the income of the employee. Here there's a small error in the law. Under the Inland Revenue Act, for employees there are special exemptions. As a result of a special exemption, we may not be charging tax on those retirement contribution, retirement payment. Now, anyway, this section is not as a result, this section, even they are not paying tax, we have to assume that they are liable to tax and there's a special exemption. Therefore, for the contributor, it is exempted. It is allowable. For the contributor, it is allowed. Or consists of contribution by an employer to pension, provident gratuity or savings fund or a savings society which is approved by the Commissioner General. Approved by the Commissioner General, subject to the special conditions. Those are, if it is not covered with this, if it is covered with this, then it is not allowable. Right. Outlays and entertainment expenses, not allowable. Reserves and provisions are not allowable. But accrued expenditure is not a reserve, not a provision. Accrued expenditure is not a reserve, not a provision. Therefore, accrued expenditure is allowable. But generally, we call it as provision. That is technically wrong. What we are doing is accrued expenditure, we are charging to the current year. The expenditure we are charging to the current year, that is accrued expenditure. Then lotteries, betting and gaming cost. If I'll go to a casino center and lose 100,000 rupees today, tomorrow I'll go to the casino center again and won 500,000 rupees. From 500,000 rupees, today's loss, I can't claim. Today's expenses, I can't claim. Right. But if I'm running a casino center as a business, that business expenditure is allowable. You know, to run these gaming businesses, betting gaming things, you have to incur a lot of cost. You need a lot of security guards, personal guards, promotional girls, then liquor type of things, food items, and so many entertainment things. For them, they are incurring these costs to run a business, therefore it is allowable for them, right? Then taxes or other levies specified by Commissioner General, and any tax or levy not allowed to be deducted in calculating a person's income in terms of any other law. Up to now, these are not specified, therefore no problem. Then other limitations of deductions. There are few more limitations of deductions. We'll see those few items also. We'll see those few items also before stopping for the day, right? Other limitations of deductions. Payments which are subject to withholding tax, but no withholding tax is deducted. Now, I'm renting office premises for my office where the rent is 150,000 rupees. Then I am supposed to deduct the withholding tax, but I didn't deduct. Then that rent expenditure is not an allowable expenditure for my business. No deduction shall be allowed except as expressly permitted in the Act. Permission may be in section 11 or may be 12 to 19, 12 to 18. Then if more than one deduction applies, you have to select the most applicable deduction. Not two, only one. Then recently in 2023, they included cash transaction limitation. Section 10, 2, capital A, cash transaction limitation, where a person pays to another person. One person pays to another person a sum of money amounting to aggregating to 500,000 rupees or more in one day, or in respect of single transaction, or in respect of series of single transaction relating to one event, otherwise than by way of an account payee check or account payee bank draft, or by using the credit card or debit card or electronic payment methods through a bank account. Any deduction shall not be allowed. Any deduction shall not be allowed. Right. It is not allowed. Then 2, the amount paid shall not be considered as cost of the asset. Right. Now, that means there are only 4 ways of making payment. Account pay check, okay. Account pay bank draft, okay. Credit card, okay. Debit card, okay. Online payment, okay. Any other way other than this, that is cash payment, open checks and all, are totally prohibited if it is meeting these limitations. Right. If you made a cash payment or an open check, what will happen? In calculating the taxable profit of a business, you can't allow that expenditure as a revenue expenditure. Then if it is something to do with the asset purchase, you can't claim capital allowances on that asset. You can't claim capital allowances on that asset. Therefore, you have to be careful. Right. Is it clear? Next part. The provisions of paragraph A shall not apply to certain people. government of Sri Lanka, government institutions, banks, financial institutions, and any other person specified by minister. Up to now, he has not specified. Right. Then single transaction is explained in this. Single transaction means the purchase or procurement of any goods or services on a single invoice, single receipt, or single statement. Are there any questions up to now?
How are they going to monitor this?
The question. Very difficult for them to monitor this. Very difficult for them to monitor. I can't answer your question because it is practically difficult. I think special allowables from section 12 to 19. 12 to 19, there are special allowables. Today, I don't think I have time to cover all these things, but I'll take 2-3 minutes and just explain. Section 12 covers the interest expenditure limitation. Interest expenditure limitations are there. Then if you obtain a loan and not utilized for the business, then you can't charge that expenditure for the business. Interest expenditure for the. Then next section 13 talks about the trading stocks. They are trying to teach us how to prepare a trading account because this is a law copied down from Ghana. No? That's why. Otherwise, this is not relevant at all. Then repair and improvements of capital asset, there were limitation. Then subsequently, they removed the word repair. Now repair, no limitation. Improvements, still the limitation is there. Then with relate to, there's limitations on written down value of those assets, the limitation is calculating. We will discuss that next day. Then there are certain research and development expenses limitations also. Research and development under section 15. Then we will discuss that on next day. Then special deduction, marketing and communication expenses is there. Then under section 16, capital avances are there. Then section 17, we get business losses, how to calculate, how to enjoy the business losses on realization of assets and liabilities. Then section 18 talks about the financial costs. Financial cost, how to limit the financial cost claiming. Then those are the items for us to discuss on the next day, right? Anyway, previous day, even I lost a lot of time because of that issue previous day. Today, anyhow, I managed to cover most of those items which I couldn't cover in the previous day, right? Are there any questions up to now? Next day, I will be covering from paragraph 4.4 onward. Are there any questions? Yeah. Are there any questions?
Yes, sir. Now, when it comes to an individual's taxation, say I have a fixed deposit, right? To do
Okay.
that, I have get a loan from a bank at a lesser rate, and I have invested in another bank at a higher rate. Now, can I deduct that loan interest
Yes.
from the interest income?
Yeah. Because under interest income, under section 11, all expenses incurred in production of that income is allowable. You obtain a housing loan from one bank at 11% and go and deposit in another finance company at 12%, we'll say 13%. No problem. It is allowed.
Global.
IRD officers might say, you have obtained as a housing loan, therefore we can't give. There's no provision in the tax law.
Yeah,
No provision in the tax law.
Yeah.
Therefore we can claim. Are there any other questions? Right. Then the time is 9:15. We will stop for the day. Okay, thanks everybody. Thank you very much. Good night.
Good night, sir.
Good night, sir.
Thank you. Good night, sir.
Thank you. Good night, sir.